Hello everyone, Jesse Webb, Traders Pro. Market conditions bearish, moving back bearish now in this bull market, and I've got some really significant levels coming in here this week, and we'll spend a few minutes talking about where those are and what we're looking for. We've seen this move back down to the downside now, and essentially what this means, traders and investors consider trading with a bearish bias. And some of those ideas are raising stop levels on your winners and selling losers versus the other way around. A lot of times traders will keep their losers and sell their winners. And in these conditions where if you have any winners, those are the ones that are working for you. You want to continue to keep those or raise stop levels on those to make sure you're protecting any capital, and then selling any losers. Sometimes those losers can continue to accelerate aggressively in markets like this. Talk about a few different levels. We've got about momentum, which has shifted back down into this bearish trend. So now we're in the trending zone and working our way towards the extreme zone. And that can happen pretty quickly. It can happen in a few days. And we'll watch that. I'll go into a little bit more detail here on that. Breadth indicator also now back to that extreme range. We've been there a couple times in this downtrend. And that also can be... look for an opportunity for a bounce around these extreme levels. That being said, things are accelerating. We haven't seen sentiment get real negative yet, but it is sliding that direction. It's starting to move back this direction, and that's when that happens. This is a very slow moving indicator, and you can see how long we've been in that upper range. We really didn't move at all. This is a 1 year time frame. We haven't moved at all for quite some time. So there's still some complacency in the market, which could be good, could be bad. It's always a double-edged sword because it acts kind of as a contrarian type indicator. When everyone is bullish, that's the time not to be bullish. When everyone is bearish, that's the time not to be bearish, right? Because there's nobody else left to take the other side of the trades. And so you get a supply-demand shift when that starts to happen. Let's look at a couple of different things. Buy-sell ratio, continuing to slide. It's at a 0.14 today. If you look back on the buy-sell ratio, you end up getting, the lowest that it ever gets. I've seen it at 0.02, but typically in most trends, when it gets to around right here, you can see 0.10, 0.14, and then in this case, it started to climb back up again. Never did get that deep right here. In this last downturn, we did get to 0.09, so we got less than 0.10, and that's right at this extreme range right here. That's the unsustainable location. You can see that this tops out. It can top out at different extreme levels, but when we approach these levels, and especially for this length of time, we either got a really significant new downtrend beginning, which very well could be the case, or we're getting closer to a short-term bottom. This typically, it can bottom out around here, but watching for less than 0.10, and we could get that in the next day or two. Could be watching for a bottom right here. So, or not necessarily a bottom, but at least some kind of a bounce. Let's look at SPY, because we're pretty oversold on SPY. But we're right at this support level. Let me go out to the year time frame on it, because if we slice through this level today or tomorrow, we've already closed now below this level, but we're sitting right at where these other support locations are sitting. S&P futures are down 20 or so we could gap below that level. Next stop's at 411, and we've got just a lot of support around that level, that 411 level. So we could see a really quick slide to there that could take that buy-sell ratio down below 0.10. And, I've seen it where we go 0.5, 0.05, 0.06. Those are great areas for bounces and opportunities for looking for a reversal. So some key areas coming in this week where we have this 422 We've already closed below that. If we close below these support areas, there's a really high probability of that 411, 412 range for support. We're now in this solidly bearish. We're still in the long-term uptrend. That's why it's still considered a bull market, because we're still in an uptrend. And even this indicator here, where we've got these snap locations in this current trend from last year, pulling back to just a 382 support area. That can still be a trending move, not a momentum type move, obviously, but we could easily slide back into this corrective location, just where we've got all kinds of, this zone, this entire range right here. And there's some distance to get there, I should say. There's a gap. You can kind of see this gap from here all the way up into this range. There's just an air gap right there of price where there's really no demand locations until we get to that 411, 412, maybe even around that 415 range. So we'll watch to see if we slide through that level today, find some support, close out, get a buy-sell ratio. It's a little bit lower, and watch for a bounce. A couple other other ideas to look at today. These are pretty horrendous numbers here. 0.14, 0.08. You can see that just about everything, even Russell 3000. If you look at this one, you've got 160 stocks that are in uptrends, 1,000 in downtrends. It's just a really, really strong downtrend and could be accelerating. We could get some additional catalysts this week with earnings, and that could play a factor. If we look at sectors and look at where we're at with this indicator, we're, again, continuing to get more downside, continuing to get more and more sectors that are falling into that downtrend. It's certainly a location to start to really be treading lightly in terms of, not fearing, because we could be getting ready for a bounce right here, but also making sure that you have your risk profile established, and that you're just not hoping that things turn out a different way because you've got too big of a position size, or you've got too much risk on. A couple of other things to look at today. I added a new watch list in for us to watch some of these Mag 7 stocks. The best one on this list is Amazon for a bearish trade. Remember that one of the things to watch for in a bearish trade, if you're looking for something to short stocks, or you're looking for put options, when you have a really strong downtrend and you've got a really strong that buy-sell ratio is looking like this, and we're looking to the downside, the momentum's to the downside, then what you would want to do is you would want to go in and look for stocks that are to the downside, that are showing weakness and that are now moving. So you've got this new high here. You've now got a counter trend back up into a resistance area and some acceleration, and this support at 50%. Yes, it's sitting right at 50%, but that's a pretty solid down day. It could get some support here, but if it breaks through that 5.0 level on Amazon, it'll be a pretty quick trip back to 118 on Amazon. Keep an eye on that this week for any kind of bearish consideration. Anything on the upside, we're just seeing that buy-sell ratio, or that new buy list, smaller and smaller, which also makes sense in this market where we're seeing buy-sell ratio and stocks just getting obliterated here. There's a handful. IAG, entirely sure how to say that, honestly. I am gold, and this uptrend here. It's not a really good-looking uptrend, but it is starting to move. And we're seeing gold move that overall direction. MSTR, a computer stock retracement, same story here. Even the new buys are not very impressive. And Netflix had a big earnings, and they're moving higher. So you've got 3 new buys. None of them are in really solid momentum zone. That just tells you how weak the market is right here. And that is that's a locomotive. That's a hard thing to turn. A couple of things also that might be of interest today, because we're talking about interest rates still, and we're dealing with this 20-year bond We're making new lows. We're in that downtrend momentum range. But one of the things that's interesting on the bond yield curve is notice right here that this 1 to 3 year treasury is actually had a pretty solid up day. So we may see, we may be starting to see in a little inkling here. You'll notice that these are all short term. The longer your treasuries have been dropping, but the shorter T-bills, T-bonds have not been falling as much and actually may be starting to move. So what that could mean on the buy-sell on the bond yield curve is that we actually may be starting to see some indication that shorter-term rates may be starting to move. That's what that is that's a shorter-term rate. And those longer-term rates have still got some issues, but if the shorter-term rates can start to come back down a little bit, then we may see a bump in that bond yield curve. One other interesting thing is if you go back to 1995, we talked about, the Fed's talking about higher for longer, which is higher interest rates for a longer period of time. If you look back in 1995 and 6, this yield curve is very, very similar, and this was 95, and we had a massive run up from 95 to 2000. Part of that was new technology. And so we still had relatively high interest rates. The yield curve, if we go from 95, 96, 96, 96, you can see how it's not inverted, but it's basically flat. Now we're getting a little bit closer to, in that 5% range. We do does end up inverting towards the top of this trend right here. Okay, but that's 4 years. That's 4 years that we had that bond yield curve looking like that. It eventually reverses. So if we look at where we're at now, what we want to see is we want to see a bond yield curve that looks like this: shorter interest rates lower, long-term interest rates higher, and this is what's happened this year is we're moving up. Interest rates are going higher. It's still inverted. But we may, there's a possibility that we could continue to see some upside as long as productivity and profitability and some of those other factors come into play. There's a consideration there to be watching for those interest rates to not move a whole lot. They very well could be stuck in this range for years, and that's an interesting perspective in my mind to be keeping an eye on, especially where we're watching and waiting for this to happen. Where we're saying, well, we have a chance that this could continue to fall, and like this or like this, every time it falls and we get to that bottom, when we get to this bottom, we end up with a little bit better looking yield profile like there and like there, okay, versus the top end and the top end. It ultimately does correct itself, but whether or not it corrects itself now or whether we get some kind of catalyst that moved the markets higher to either retest new highs or it starts to roll over, we shall see over the next few weeks. That'll do it for today's update. If you don't have access to the site and software, you can sign up with the link below, and we look forward to having you. Have a great day today.